Hey everyone, welcome back to Corporate Decoder. Today, Fortress Private Lending Fund F.P.L.F just filed an 8K reporting on unregistered share sales and some other juicy details, and I think you'll want to see what they reveal about their current financial health. Quick note, this is not financial advice, just my take on public filings for educational purposes. We're going to break down how they sold shares to investors and look at their latest financial snapshot. Alright, so what we have here is a current report, basically a heads up from Fortress Private Lending Fund to the market about some important things happening. First up, the company sold some of its Class I common shares. Think of these as ownership pieces in the fund. They sold these shares for a big chunk of money, $10.4 million in total. The exact number of shares was locked in on May 21, 2026. The price per S-share was set at the fund's net asset value per S-share, or NAV. As of the 30th of April 2026, this sale was done under a specific exemption for private sales, meaning they weren't registered in the usual way with the Securities and Exchange Commission. This is common for funds like this, selling to investors who are considered accredited investors. These are typically individuals or entities that meet certain income or net worth requirements, making them less likely to need the full protection of public registration. Looking at the table, they sold 431,701 shares. The total consideration received was $10,430,000. This sale happened as of May 1, 2026, but the final share count was confirmed on May 21, 2026. This means they had committed to the sale, and the final details were ironed out later. Now, let's dive into the net asset value, or NAV. This is essentially the true per share value of the fund based on the market value of all its underlying investments. As of the 30th of April 2026, the net asset value for Class I shares was $24.16 per S-share. This is a key number because it was used to price the shares they just sold. The report also gives us a snapshot of the fund's overall financial picture. As of the 30th of April 2026, the company's aggregate NAV was a massive $1.1 billion. That's the total value of the fund itself, the fair value of its portfolio investments, meaning what all the things they own are worth on the open market, was even higher at $1.8 billion, and they had about $763.8 million in debt outstanding. This gives us a picture of their leverage. Next, they declared a May distribution. This is basically the income generated by the fund being passed on to its shareholders. For Class I shares, the distribution per S-share was $0.1812. This distribution is for the monthly earnings period of May 2026. It is set to be paid out around the 23rd of June 2026, either as cash or reinvested back into buying more shares, depending on what the shareholder usually does. Let's look at the portfolio and business commentary. This is where the company gives us a feel for what it's invested in and how well those investments are doing. As of the 30th of April 2026, the company's portfolio was valued at approximately $1.8 billion spread across 88 different companies in 20 different industries. This shows a good amount of diversification. Their portfolio is heavily weighted towards first lien investments at 98.0%, meaning they are the primary lender to these companies, which generally offers more security, and 99.9% of their debt investments are floating rate, meaning the interest they earn can go up or down with market rates. The weighted average yield at fair market value for their directly originated debt investments was a solid 10.1%, and the weighted average yield for the overall portfolio was 9.8%. This indicates they are generating decent returns on their lending activities. A 9.8% yield on $1.8 billion is substantial income. Now concerning the offering status, the company is continuously offering its Class I common shares. They are doing this using exemptions from the standard registration rules. Similar to the private sale we discussed earlier, as of the date of this report, they have issued a substantial amount of shares, 43,641,075 shares, bringing in a total consideration of $1.1 billion. This figure does not include shares issued through their distribution reinvestment plan. Currently, there is no established public market for the company's shares. This means you can't just go to a typical stock exchange and buy or sell them freely. As of the date of this report, they had 440,38937 shares issued and outstanding. This is a good number to keep in mind when thinking about potential dilution. Overall, Fortress Private Lending Fund seems to be actively managing its portfolio and raising capital. The NAV per share of $24.16 and the yield of 9.8% are strong indicators of their performance. The large portfolio value of $1.8 billion spread across many companies and industries suggests a diversified and robust investment strategy. The fact that they are continuously offering shares and have raised over $1 billion shows investor confidence in their model. However, The absence of an established public market means liquidity could be a concern for investors looking to sell their shares easily. The risk I am watching is the potential for illiquidity, given there is no public market for their shares. My biggest concern is how easily investors can exit their positions if needed. What I'm actually looking for is more information on the trading activity and any plans to potentially list publicly in the future. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives. Check out the Discord in the description.